Hi, this is Marc Walton with your analysis for the week commencing the 23rd of March. I prefer to trade wherever possible from weekly charts and worst case scenario to go down to daily charts. I also prefer to trade with the trend, and that is a little difficult at the moment because we're not sure whether or not price is about to turn back down or back up again at the moment, or whether we're just simply waiting for pullbacks. Now, many of you in the forum last week made profit on the Euro USD by swing trading, that is picking tops and bottoms, and I know Pierre had quite a few that he showed you on Friday's video and he's explained how to do it. Now, it doesn't really suit me, and to be honest, my success rate with swing trading has never been good, so I do tend to stick with the trend. Now, here on the Euro USD on a weekly chart, we're clearly in an uptrend. It's gone back till May of last year, and for me to place a forward order and walk away, I'm going to be looking around 36.30, 36.50 for the week ahead. It is an area of previous support and resistance, as you can see here. It is a weekly trend line and it is an intersection with a 50% fib. So multiple reasons why lots of traders around the world will be watching this area for a potential bounce back up. Those of you trading intraday, we're also in a channel. This goes back to the beginning of this year. But I'm not going to take this one in its current position. The reason being that this 38.34 was major previous support and resistance is just in the way, and we could be on for a bigger pullback. If I was trading this intraday, I would be more likely to be looking around 3700. You've got 78.6 fib, you've got the whole number just below, you've got a 55 EMA. So there's more reasons here intraday to watch. And what I mean by watching is you go down to a daily chart, even a 4-hour chart, and you look for candle patterns, but that would be of more interest in today. More aggressive entry would be here. This is the Swissy, and this is the reason why I say it's difficult at the moment, trying to pick tops and bottoms. A couple of weeks ago when I did my analysis, I was looking here, it was a double bottom and there was lots going on, and I had a loss there, and then I didn't take this last week. And what we've got, we have a spinning top, complete indecision at the bottom of a big move. Now we are in a downtrend on the Swissy, and once again, for me to place a forward order, I prefer a pullback, and 90 is the area that screams at me. It is major previous support and resistance. It is a whole number, and we have 50% fib in the area as well. So for me, multiple reasons why I want to take it here, and we also have a weekly trend line in place. So again, you're always looking for as many reasons as possible why price is likely to react in an area. You could of course go for a long now and you could well make pips, but as I said to you earlier, I'm looking for multiple reasons and I'm preferring to go with the trend, and so for me my entry will be around 90. Now, in terms of stops, people always ask, well, where do you place your stop? Well, you have a number of options. You could be very aggressive and just go 20-30 pips just above the trend line. You could go just above the daily 200. Personally, I will go above this weekly 55 EMA. So it's around 110 pips, which frightens some of you to death. But you still risk the same amount of money as if you were trading with a 20 pip stop. And the reason why I like this trade, that 55 EMA will come down as the market opens, so the stop will be slightly smaller. But I'm risking 100 odd pips for a potential move down here of 300 pips. So a 1 to 3 risk reward ratio, going with the trend, is a lot more conservative way to trade. This is the British pound. Now the British pound on a weekly, we have almost got a 5-8 cross here. We have stochastics rolling over, and we've had MACD divergence going on for ages on this pair. So it is a major area, and it could well be that this is going to pull back down to 6,300, possibly even further. What I'm going to do is this. I'm going to place a forward order down here, and this is from a weekly chart. So if we get a big break back down again, confluence, multiple reasons. We've a 55 EMA crossing the 200, got the Bollinger Band at 78.6 fib, so loads of things going on here. That will be my weekly entry. However, on the daily, I will enter at the market open in its current position. And the reason is, look at this. This is a trend line and a channel that goes back to 2013, to the summer, and each time price has come back down here, it has simply bounced off and moved back up the channel. And the channel you are looking at here is approximately 500 pips of move. and it would take you up to the latest high at the beginning of the year. So here you could be more conservative, would be to place your stop below the 78.6, which is 100 pips away again. But 1 to 5 risk reward ratio, guys, is an awesome potential trade. So that will be the one for me intraday. The only thing I will do is watch at the market open. You're looking for gaps and things. You want to make sure that that price doesn't suddenly gap down. If it gaps down, it's actually even better because it can get you a better entry. But that for me is an intraday. Potential roadblock on the way up is this 200 EMA on a monthly. So at that point I will take some profit off and I would move my stop trailing behind. So 200 EMA, big area of support and resistance. But the overall move, in theory, should go 500 pips. Euro pound, I showed you in recent weeks. I originally shorted, I think it was 83.40, and that was a loser. Now this is a demo account, but I'm in this from 8400 as per the analysis from a couple of weeks ago. And again, it's a major trend line. We're in a channel going back to previous summer. It's 78.6 of this recent move, and therefore multiple reasons why this was an attractive trade. If this breaks, then you have to start thinking in terms of possible changes of direction. But bear in mind, this is a weekly chart, so often you can get a spike through and then it simply turns back down again. If you go down to the daily, you can see how price came and slammed up against the 8400 last Tuesday and promptly fell back down again. But it is beginning to look a little bullish. We're getting these EMAs are starting to turn over here. It's all a bit conflicting though, because then stochastics are going back down again. But for me at the moment, 8400 for a short was a good entry and still would be of interest. If it broke and closed above there, I would wait for a daily candle to close, but if it does, I would be tempted for a long, because once it breaks this area, then there is a lot of room up here to go back to. I think this is a monthly trend line that goes back years and years and years. So 8600, we could be on for a run up, and then we'll be looking for a big move back down again. The Aussie dollar on a weekly. I showed you in recent weeks how this pair, it's range bound. And again, I don't mind trading ranges and I don't mind trading trends. With a range, all you're doing is you're simply looking to long. Had you longed each time in the last 6 weeks at 8900, you've got 1, 2, 3 winning trades here, and you're short up here around 90.60. Then you've 2 or 3 winners there. So that is an option. You could look for it. And this is the trend line we've got in place going back months and months and months. And we've also got here a potential triangle breakout forming. So your options are with this. I would be interested again and long at 8900 if it does pull back down again. If you're trading intraday, look for clues for potential shorts here. What you're really hoping for is a break one way or t'other. And what you look for with a triangle breakout, you look at the middle figure, 706. That's a 706 pip. So a 700 pip triangle. And the theory goes that if we get a breakout from this, and whether it be up or down, that what you do is you look for a candle to close, and I would do with this on a daily chart at least, and I would want on a break upwards price to break above 191.50. We want to be getting above these recent highs, but you look for a breakout, then a pullback, and what should happen, technically speaking, you should see a 700 pip move up or a 700 pip move down. And what happens is the nearer price gets to the point of a triangle, it's like a screw turning and turning and turning. It's tightening and tightening, and when it bursts, boing, it will shoot off. So be trading, looking intraday for bounces and looking for triangle breakouts. This is the CAD. The CAD still looks bullish here on a weekly chart, and it made a new high last week. However, there was very, very good news out of Canada on Friday. And if you're going to look at anything for a potential swing back down, then I think this is of most interest, certainly to me. And the reason is this. Look at this. This is a shooting star pattern at the top of a major move. The previous day, Thursday, you've got this reversal candle. And now the theory goes that price will turn back down again. How long for, of course, we don't know. Now, really, we've missed this already. But if price was to pull back up again on Monday morning, and you were looking anywhere around here, you could risking 50 pips for a potential 300 pip move back down. The other option, if you're going to be conservative and you're going to trade with the trend, look how many times it's done it. 1, 2, 3, 4. Each time it's been a major move. That is the area for me because it is a fib area. It's not the strongest fib, but it's also the daily 55 EMA and a weekly trend line. So that is a major strong area for me, and I will place a forward order to long there. But as I say, it is of interest for me on this pair for a potential swing back down. Watch at the market open. This is the dollar yen, and I showed you a few weeks ago how price just continues to bounce along this area. Originally I had this line at 101.14 and it gave us lots of winning trades. It's moved up slightly now. We're around 101.30, but price is simply bouncing off. So you may have lost here 1111. But what we've also got here, I'm just going to move this line. Let's move the other line. You've also got, again, a potential triangle breakout. And remember, the other week I'd said to you, I wouldn't long in its current position until it broke above 104, and that is still the case for me. But if price is going to break out of here, your triangle here is 650 pips, and therefore we could be on for a major breakout here. Equally, it could go south. And I'm going to contradict myself a bit here, but I am actually going to place a forward order from a weekly analysis to long at 100 again, because it is such a major area here. If price does break out of this triangle and breaks below 100 and that trade loses, I would look on a daily chart for a clear close below 100. Then I would be interested in an M2 pullback with a view to a short. The good thing with this pair is there's plenty of room in either direction. So once we get out of this area, but if you can say, if you're going to trade it intraday, be looking for bounces anywhere along 101.30. So you're a yen on a daily chart. And again, a couple of weeks ago when I did my analysis, I was saying to you when it was up here, I wasn't going to long because it was too high. It made a move, it was a double top area. I just felt that I would prefer a pullback. Now, again, Pierre, I believe, did well on a swing trade on this, and if you want to swing trade, then get into the forum with Pierre. It's not his normal style, but he does incorporate this as well to allow for changing market pattern. But what I was saying is 141 was the area for me for a long, and this is again is a demo account, but I've got this on my live as well, and it's gone absolutely nowhere. The idea was to place the stop just below the 55 EMA. I was a bit more conservative and went down here. 130 pips for a potential gain of 252.60 pips. It's all a bit wishy-washy at the minute. I certainly wouldn't recommend it at the moment. More conservative entry would be a pullback all the way back down here to this weekly trend line. Final one is the Aussie dollar yen. Again, we had the pin bar reversal candle at the top of a big move up here, and I pointed this out to you a couple of weeks ago when I was doing my analysis, saying that some of you would be interested to short at 94. And I wish I'd followed my own tip because that went 300 pips. But again, not my style. In between that, I was looking at 9,200 potential bounces, but it's all very messy here, guys. But what is more relevant for me here is this trend line that goes back to the end of January, and 61.8, the recent move will be here around 91.70. So if we do get a pullback down here, then I will be interested to long, and I will have a look at 9,400 for a potential bounce back down, because if you look to the left, it was a previous area of major support and resistance. Yes, it broke a few times, but that is a major line in the sand for me. So you want to swing, you want to trend trade, or you want to range trade, we have all the bases covered. Have a great week.